Hey everyone, welcome back to our live updates on JobKeeper. It all seems to be JobKeeper at the moment. Obviously a lot going on, a lot changing. As I said last Thursday before Easter, firstly I hope everyone had an awesome Easter with the family. Obviously not a lot we could do for those that live on the mid-north coast. We did get to enjoy the beaches still, go for a walk on the beach and a bit of a swim for exercise, which was great to do, and I hope everyone got to do a bit of that over the weekend and get yourself ready for this week. So as I said last Wednesday, the Parliament met, passed all the legislation in relation to JobKeeper, and late on Thursday the 9th, all the legislation came out. So I've reviewed the legislation and I'm going to try and make it as easy to follow as I possibly can. Mind you, I have got notes here that I'm going to be reading from, but if I feel like I'm sort of confusing the issue, I will try and explain it in layman's terms so everyone can understand what they need to do in relation to JobKeeper. Now, there is a lot to be done. There's forms that need to be completed by the employer, employee, elections, and obviously you're going to need to update your payroll systems for this as well. So that's your MyOb, your Zeros, your QuickBooks, and any other payroll system that you're running out there, and we can again assist you with help on how to put this information in the payroll system. But it's important it's in there and it's in there correctly, so the single touch payroll goes directly through to the ATO. I think if you can get that working properly, it will enable faster payments for you once you start getting reimbursements in that first week of May. So I'm going to read a fair bit from the explanatory statement, which has been issued by the Treasurer. As I said, it was issued. This document was issued 9th of April. I'm not sure what time it was finished, but I would assume probably pretty late there on the Thursday. So the rules specify that the JobKeeper payment is available in fortnightly periods between 30th of March 2020, which was the commencement date, if we all remember, and the 27th of September 2020. So it's a 26-week period, and it's worked out fortnightly. So a business that is entitled to the JobKeeper payment will receive a fixed payment of $1,500 per fortnight per eligible employee. The payment must have already been passed on to the eligible employee in full. So that's an important fact. I know there's been a bit of talk about how can we actually physically pay our staff this $1,500 a fortnight, well, $1,500 gross it is. But how can we pay our staff the $1,500 a fortnight when we've closed down or doing minimal turnover? I know it's hard. We're all in the same boat, trust me. So if you've got cash flow behind you, you'll be able to do it. If you don't, I would firstly approach your bank. The banks are meant to be assisting in this regard and increasing your overdrafts temporarily. It'll be for a 6-month period. Essentially, this doesn't end until October will be the last time you get your payment. So what it will mean is if you don't make any money in this 6-month period, the overdraft facility would be in place for that 6 months, and then when you get that last payment, you'll get that money in, and then that will reduce that facility. But it's important that it is passed on to the employees each fortnight. For those who do weekly pays, you can change to fortnightly because it's a fortnightly basis, or keep to weekly if you choose. It's your choice. Okay, so when is an employer entitled to a JobKeeper payment? In general terms, an employer is entitled to a JobKeeper payment for a fortnight if, for the fortnight, that fortnight is a JobKeeper fortnight. So again, that's that 30th of March through the 27th of September. The employer qualifies for the scheme on or before the end of the fortnight. So there's a lot of people talking about, is this tested monthly, quarterly? You can test monthly or quarterly, but essentially it's a fortnightly thing. The payment is for a person who is an eligible employee of the employer. The employer has satisfied the wage condition by making payments to the eligible employee equal to or greater than the JobKeeper payment, less PAYG withholding and salary packaging, that the employer will receive for the employee for that fortnight. And the employer has notified the Commissioner of a range of matters, including notification of its election to participate in the scheme. So that is long-winded, and I'll go through a bit of the detail. So what is a JobKeeper fortnight? An employer receives a JobKeeper payment in respect of each JobKeeper fortnight in which they are entitled to the payment. Entitlement to a JobKeeper payment is assessed in relation to a fortnightly period known as a JobKeeper fortnight. Each of the following is a JobKeeper fortnight. The fortnight beginning 30th of March 2020 and each subsequent fortnight ending with the fortnight ending 27th of September 2020. So they're your JobKeeper fortnights. How does an employer qualify? The JobKeeper payment is only available to an employer who qualifies for the scheme. An employer will qualify for the scheme for a particular fortnight if it satisfies the following requirements. On the 1st of March 2020, we've all heard that date to death, but 1st of March 2020, it carried on a business in Australia or was a non-profit body pursuing its objectives, principally in Australia. Before the end of the fortnight, it met the decline in turnover test. So remember, decline in turnover test, 30% for most businesses and 15% for not-for-profits. 50% decrease if it's over $1 billion in turnover. And none of the following applies. On the 1st of March, it hadn't been subject to major bank levies or anything like that. So, or in liquidation or administration. If anyone fits that category of administration or is looking at it, perhaps reach out to us so we can have a discussion on that first before you go down that line. It may well be that you don't need to if you can get through this JobKeeper. Once an employer decides to participate in a JobKeeper scheme and their eligible employees have agreed to be nominated by the employer must ensure that all of these employees are covered by their participation in the scheme. This includes all eligible employees who are undertaking work for the employer or have been stood down. The employer cannot select which employees will participate in the scheme. This is a one in, all in. Okay, so this is an important part and probably didn't have clarity before, and now it does. If you have an eligible employee, basically, and you choose to apply for JobKeeper, then all your employees are eligible to do it. You can't pick and choose which employees you put into that scheme. Your employees can choose not to participate, but you can't say, I don't want that particular person in, for whatever reason that may be. So that's an important part to remember. Another key element of the scheme is that qualifying employers that decide to participate in the job scheme must, as a condition of entitlement, notify all employees in writing that they have elected to participate in the scheme. And now, we've got some forms which I think were only just available today on the ATO website. We'll put a link up on Facebook for that. We'll get that done today, so everyone's got that link for this form. It's called a JobKeeper Employee Nomination Notice. Basically, it has your details as the employer, and then you've got the employee details, obviously their name, tax file number, date of birth, and they have to nominate, and they sign the declaration too, okay? So basically, they're saying that they're eligible employees, so it's all those things we talked about previously. They were employed by you prior to 1st of March, if they were full-time or part-time. If they were casuals, they'd been there for 12 months prior to 1st of March. They're 16 years of age or older as at 1st of March, an Australian resident or citizen, or have that subclass 444 visa holder. And they're saying that they aren't in receipt of JobKeeper payments anywhere else, and they're not currently receiving parental leave, or dad or partner pay. So they're some pretty key elements there. You, if you are on maternity leave or parental leave, or dad or partner pay, you can't get this as well. It's one or the other, okay? Or being out on workers' compensation too. If you've been on workers' compensation, you're not eligible as well, all right? Again, we'll have that link on our website as well as our Facebook page. But again, contact your manager here at TJL, or just email us at info@tjlbiz.com.au, and we can get you the forms. But it's important we get those done. So decline in turnover test. The decline in turnover test needs to be satisfied before an entity becomes eligible for the JobKeeper payment. Once this occurs, there is no requirement to retest in later months. Okay. However, in saying all that, it will be tested by the ATO. So what it's saying is that you don't have to continue to test it yourself if you know you're down. The ATO will do that automatically when you lodge. However, and there'll be documents we need to lodge every month as well, from what I understand. And again, that part's not overly clear. But if you satisfy April, you still got to continue to satisfy those fortnightly periods. All right. The basic decline in turnover test works by comparing the projected GST turnover for the entity for a period with its current GST turnover as calculated for a relevant comparison period. So this could be March to March or April to June quarter versus last year, and again you do it for September quarter. Okay. So the periods of test, as I said, can be month to month, so March, April, May, June, July, August, September, so those months versus the same months last year, or you can do the quarter ends June or quarter ends September. That's where you can do it. Accordingly, for example, a business can make the comparison by comparing the whole of the month of March with the whole of the month of March 2020 versus March 2019. Or by comparing the quarter beginning 1st of April, so that's your June quarter, with the quarter of June 19 last year. All right. So just some examples now, and I saw this example as being pretty good for some of the farming clients that would have been affected by the recent fires. So this one's satisfying the alternative decline in turnover test, it's called. So Camille's farm carries on a farming business and retails flower sales in Australia. He was subject to severe drought from 2018 until September 19 that reduced the amount of flowers it could grow. It returned to normal crop output in January 2020. Its retail flower sales became significantly affected in March 2020. It assesses its eligibility for the JobKeeper payments on the 3rd of July 2020 based on a projected GST turnover from its farming activities for the quarter beginning July 2020 of $2 million. The corresponding period is the quarter beginning July 19, a period in which Camille's farm was severely affected by drought. Because of the effects of the drought, Camille's farm had a much lower than usual GST turnover of $2.5 million. The July 2020 quarter turnover falls short of the July 19 quarter turnover by $500,000, which is 25% of the July 19 quarter turnover. This does not exceed the specified percentage of 30%, so the decline in turnover test is not satisfied here. However, because of the effects of the drought on the farming business, the Commissioner is satisfied there is not an appropriate relevant comparison period for an entity. So what we're saying here is that in September 19 quarter, the farm did $2.5 million in sales, but it was through drought. So it was affected by drought. In September 20, it did $2 million, which was the effect of the COVID-19. So it's $500,000 down. However, what the Commissioner is saying is that the September 19 quarter was not a normal quarter because of the effect of the drought. So basically the Commissioner has the ability to say that we believe its shortfall is over 30%, and she will therefore, and Camille went back to the quarter before in July 17, which showed $4 million in revenue in that quarter. So again, when you've got significant issues in your business, and again, we've had both around here, bushfires and drought, I think it's easier for us to go back to other periods and confirm that turnover numbers were down. And then another one here, which is a new business. This is a Subtech. It was in it's a startup technology company. It started 1st of October 2019, selling its products to a range of businesses, including cafes and restaurants. Clearly, its sales are going to be down. So despite strong initial sales, its sales declined substantially in March 2020. So again, the Commissioner can have its discretion here, and because it was doing larger sales numbers from October through to February, they can use that as a comparison period to confirm it was down by more than 30%. So there are other options out there, and as I said, it's important that you get in contact with us and we can try and help you through this. So who is an eligible employee? I've been through that, so I won't do that again. Well, just to re-clarify, that they have to be employed prior to 1st of March 2020 on a full-time, part-time basis. They have to be 12 months with you as a casual, above 16 years of age, be a resident of Australia, or hold that 444 visa. Okay. There's also one here I saw on change of business. And we've had some clients that have been affected by that. So it's where they purchased the business in the last 12 months. So to confirm you're casual employees, the Commissioner has said that you can, if you can prove your employees were casual employees of that business before you took it over, then you can you can satisfy that 12-month period before 1st of March. So let's say you took over the business 1st of January 2020, and that business had been operating for 2 years, and you had a casual, so let's say you had 3 casuals that you took on, then those three casuals worked with that business that you purchased prior to 1 January 2020 and had been there prior to 1st of March 2019, then it means that you satisfy that 12-month test for the casual employee. So again, you need any clarity there, just give us a call. Terms. So as I said, there's nomination forms, which I said we'll put on our website. That's important. I would suggest everybody get onto that really, really quickly and make sure you speak to your employees. I know there's some employers already paying the $750. Some started doing it prior to it being legislated last Wednesday. Basically on the proviso that they knew it was going to happen. And others started after. So I would suggest that you get these nomination forms completed ASAP by all your staff. Those TJL clients that we do your payroll or assist you with payroll, we will assist you through that process, and we'll also obviously assist you through setting up your payroll to make sure you can do this effectively. So just in relation to components that together must equal the 1,500, and this was a little bit, super was one of the parts that was a bit unknown. So the components amounts that together must equal or exceed the 1,500 are amounts paid by the employee to the employee in fortnight by way of salary, wages, commission, bonus or allowances, less PAYG withholding. Amounts withheld from payments made to employees in the fortnight if they have a HECS debt, and superannuation as well. Okay, so super is included in that 1,500 if they're working. All right. So if they're working, so let's talk about that quickly. So if you've got employees that are working and earning $750 a week or 1,500 a fortnight, or over, then you need to remit superannuation on that payment. Okay, so if it's your 1,500 a week, a fortnight. You work out your withholding on that, and then you do your 9.5% on the 1,500, which is ballpark, about $112 or something like that, I think, maybe a bit more. So basically you need to make sure that you remit the super if they're working and are on 1,500 or more, okay? Now, if you've got a staff member that is casual and is working, let's say has worked for you but only earned $100 in working hours for you for that fortnight, then you need to remit the 9.5%, assuming that they're over the $450 a month, because that's your minimum amount you got to pay before super's liable. But assuming they are, you would pay your $9.50 in super, so you've paid that employee $109.50, including super. So what you need to top them up by is a difference between the $750 in that week and the $109.50 you've paid them, including super. Okay, so I'll just get my calculator out because I need that these days. So 750 minus 109.50, so that's $640.50 is the additional amount you need to pay that employee for the week, because you need to pass on the full $750 a week or $1,500 a fortnight to the employer. Whether they earned that money or not, it doesn't matter. And this is where you need to set up a separate pay line in your payroll system to help do this, so it doesn't calculate superannuation on it, because there's no super payable on that balance. All right. More importantly too, if you have stood down staff, okay, so staff that aren't working for you in any shape or form, but you've elected for JobKeeper and they've elected to join you, then you're paying them their $750 a week or $1,500 a fortnight. Then you have no super obligation on that. You've got PAYG withholding, so tax on that you still got to remit, but no super because it's not ordinary earnings. Okay, so that's very important to get that right. And this can be a little bit confusing. I know someone who was doing payroll today, and it's always difficult when you've got a few more staff and they work different hours, different rates, and then penalty rates on Easter weekend. It's a shame nobody got on top of that earlier and possibly looked at moving penalty rates. Maybe a few more restaurants and cafes would have been open over that weekend doing takeaway if we had to remove penalty rates. But anyway, let's not cry over spilt milk there. But the more people you have and penalty rates makes it harder. But once you get the hang of it and do your first pay run, I'm sure it'll get easier as the weeks and fortnights go on. All right. Those who are paying weekly, you can move to fortnightly. That's been pretty clear in here. It's fortnightly pay periods, so as I say, it's important you make the payment, but you don't have to do weekly like you used to. Whether that's going to help cash flow or hinder cash flow, I'm not sure. It really comes down to each business. Again, we can try and assist you with that. Super, I think I've done super, so that's all pretty good. There is a transition period here as well, because this was backdated to 30 March, and obviously we're only getting legislation as late as last Thursday, then we had Easter, and it's now the 14th of April. Basically, the ATO is allowing us till the 26th of April to get all our documents done and dusted and in a row, and have it on file, and then the information submitted to the ATO. So that's registering for the JobKeeper, and then they will still back pay you to the 30th of April. So they're giving us a grace period because of how delayed it's been. And I shouldn't say it's been delayed. It got rushed through as quickly as it could, but we have a grace period. So I'll just move on to business owners now. And I think I did mention it on Thursday last week that business owners, sole traders, partnerships and so forth are entitled to the JobKeeper. Basically, it includes business owners who is an employee, including a sole trader, an adult beneficiary of a trust, or a director or shareholder of a company. However, it will not include owners who are not employees, such as sole traders, partners, beneficiary trust, or director of a company. So what that means is if you're a working director, working sole trader, working partner, or working beneficiary of a trust, it's very common that you've got mum and dad that have a trust. If you're the working one, and it's only one person that can be eligible in each business, you can appoint yourself to be that eligible person to receive the JobKeeper for yourself. So again, that's sole traders, partnership, trusts and companies. So companies can be director or shareholder. But again, only one person. So it doesn't matter if you've got 5 people working, it's unfortunately only one. Okay. And lastly, compliance. We all love compliance. So there are a number of obligations imposed on the participating employers and businesses under the JobKeeper scheme. For example, as described above, it must have paid at least $1,500 to each qualifying employee for each JobKeeper fortnight, and must notify the Commissioner of changes in circumstances that would affect its entitlement. Okay, so in layman's terms, you've got to have made the payment. You've got to have filled out the nomination notice. If they haven't worked the full amount of that $1,500 in the fortnight, you've got to make sure you remit the full amount. You've got to make sure they're not getting it anywhere else. If they are, you need to know straight away so you can switch them off. And if you have received any money from the government that you can't pass on to an employee for any of those reasons, you need to remit it back to the ATO pretty quickly. I'm sure everyone will do their best here, and I'm sure there'll be discretion from the ATO if there's some errors, but it's important that I think it's important the employees are aware of their obligations. Reality is, as the business owner or employer, the buck lies with us, but the employees are the ones that really can get it wrong for you if they get it somewhere else. And again, these employees, if they get a JobKeeper with you and get the $750 or more, they can still get a job somewhere else and work a second job. There's no issue with that. They just obviously can't get the JobKeeper the second time. So that's important. It's monthly reporting still, as I said. They're talking about this, it's a fortnight thing, but the reporting that we will have to report back to the ATO will be a fortnight reporting. Again, we haven't got that detail yet, and I'm sure that will come in time, just as the employee nomination form did. So I think that probably wraps it all up in relation to JobKeeper. I'll touch on the rent thing again. There was obviously a bit more talk about that over the weekend. And again, the New South Wales government have supported it and are putting funds into both residential stuff now too. There's that 25% reduction, up to 25% reduction, in land tax available for landlords that pay land tax. Look, I know it's tough for landlords as it is for tenants. We all have commitments here, whether you be the tenant or the landlord. You really should negotiate your rents in good faith as quick as you can, so everyone can move on. It's highly important. The landlords have the option with banks to freeze their loans at the moment. Granted, the interest is capitalised, I get that, but it is for business owners as well. You've got the land tax reductions. So if you're a commercial tenant and part of your outgoings is land tax, remember you need to pass on that reduction in land tax to your tenant as well. You can't keep it to yourself. But I would suggest that, for those landlords that don't have an advisor or an accountant, maybe reach out and talk to us, and we can try and help you through this information. I'd probably be suggesting you get turnover figures from your tenants so you can work out how much they are down, what is their profitability, if it's anything, so it can help you make determinations on what you should do with rent, whether that's just a waiver or moving out your rent, increasing your lease term from, as I said the other day, if your lease finishes in June next year and you give a 6-month deferment, just extend your term by 6 months at the end. It's better having a tenant than no tenant. So just think about that. I know landlords are jumping up and down quite a bit here. I get it, but look, at the end of the day, you're better off having a tenant in there after this than having an empty shop or commercial place or a unit or whatever it may be. So just think about everyone in this. We're all in this together. As I said, there's not too many businesses that aren't affected through this. And those that aren't right now, I think at some point they will be. And we all need to, be prepared to help those businesses that are affected down the track. So look, that's it for us today. I hope that sort of made a bit more sense in layman's terms, certainly what I tried to do. And again, if you've got any questions, just please call me. 0410 683 023, as I said. I'll answer my mobile whenever I possibly can, or call the office 6554 9511, or email info@tjlbiz.com.au, and we will do our best to help you through this current situation. Anyway, have a good day or good evening, and we'll talk soon. Thank you very much.